Thank you for watching Weekend at One and welcome back. Now, the Kenyan shilling continued to gain ground against the dollar Friday, with many pundits now asking if this strengthening will hold or is just a temporary situation. Many politicians, business leaders and analysts have weighed in with their own predictions, creating further panic and confusion in the market. KTN's Esther Diana sought clarity on the situation from experts and brings us the following story.
It has been a wild week for the dollar in Kenya, with wild swings characterizing the foreign exchange market, especially after the news of Kenya's new Eurobond sale broke expectations that the country would have to repay its Eurobond debt, to the market drying up the supply of dollars as traders hoarded the greenback ostensibly to make a kill as the exchange rate skyrocketed. On Friday last week, the shilling was trading at 160. Today, Friday the 16th, the shilling closed at 145.8, a whopping 8.9% down in just 1 week.
We had a positive investor sentiment in the international market. We were supposed to be caught in a certain place, but we escaped in terms of repaying the money.
Many months now, the Kenyan economy has been adversely affected by the weakening shilling. The price of everything from petroleum, sugar, motor vehicles, and other imported products adjusted upwards to reflect the deteriorating exchange rate. With this in mind, many are now looking at the weakening dollar exchange rate as a possible relief on this price pressure. Economists, however, argue that the strengthening shilling is only good if it is sustainable.
What whoever is trading in the foreign exchange market is thinking about now, and even for us as ordinary people, is stability. We want a stable rate. Now that it has been going on a downward trend, the most affected group of people are those who are doing export.
Further, Kenya has in the recent times benefited from an inflow of dollar support from global lenders such as International Monetary Fund and Trade Development Bank, which economists now believe has had an impact on the strengthening shilling. Now, what is a strong shilling and why does it matter? Simply put, a weak shilling is harmful to the country's economy, given that Kenya is an import-driven economy. Hence, a stronger shilling is a boost for the economy and a major boost for incomes, though it may hurt exporters.
So if you look at the Eurobond, pretty much we didn't get dollars coming into Kenya. So it was issuing a Eurobond, which is now to pay off the current Eurobond. So no net inflows coming into Kenya.
Through the social media platform X, formerly Twitter, the president's economic advisor, David Ndii, attributed the sudden strengthening of the shilling to the reduced risk of Eurobond default following the successful issuance of a new bond on Monday. Other experts agree.
Yes, we had close to 288 billion shillings being put as bids in the infrastructure bond that sold out on Wednesday. But what proportion of foreign interest was pegged on that?
Today, while data from the Central Bank of Kenya showed the shilling exchange at an average of 145 against the dollar in some forex bureaus, the greenback was changing hands for as little as 139 shillings flat, as traders who may have been hoarding began to offload to the market.
The issue to do with the guys who are having money, hoarding money for speculation purposes. Every time they see the market changing, they also now want to dispose of it quickly.
The scramble to sell off the dollars means that buyers, both for trading and hedging purposes, keep bidding lower and lower for the currency.
Please note that now the risk of failure to settle for the Eurobond is gone, and so you need to get back to business, sell your dollars and get back to business. Don't do any speculation anymore.
Financial sector regulator and CBK governor Kamau Thuge says the CBK's aggressive monetary policy stance has put on notice individuals stockpiling dollars in the hope they will cash in from the shilling's continued slide at a later date. Thuge has also said they are determined to tighten the monetary policy until the exchange rate is stabilized. For KTN News, I am Esther Diana.
The National Commission for Human Rights is expected to submit a report